Hi guys. What if I told you that every time you deposit money into your bank account, you're not actually saving it? What if that simple action, something we retaught is responsible and secure, quietly unlocks a loophole that transforms your money into their profit machine? A loophole so old, so deeply embedded in the global financial system that most people don't even know it exists. And yet it affects every paycheck, every loan, every interest rate, and every economic crisis you've lived through. Today we peel back the curtain on the hidden banking mechanisms that operate in plain sight. Mechanisms designed not to grow your wealth, but to extract it. Because once you understand how this system really works, you'll never look at your bank account the same way again. Before we dive into the loopholes themselves, we need to step back in time to the origins of modern banking. It begins in Europe, centuries ago, before digital money, before credit cards, before the global markets that move trillions every day. Back then, money wasn't imaginary. It was metal, gold, silver, coins with real weight and real value. People needed a safe place to store their wealth. So goldsmiths, the early bankers, offered vault services. But then something happened. They noticed a strange pattern. People rarely asked to withdraw all their gold at once. Most deposits just sat there. And from this simple observation, a dangerous idea was born. If depositors leave their gold untouched, why not lend some of it out at interest? The goldsmiths kept records. They knew how much gold they had. With every new loan, they discovered something extraordinary. They could create value out of thin air, could profit from money that wasn't theirs. This was the birth of fractional reserve banking, a system that allows banks to loan out multiple times the amount of real money they hold. A system still used today. Only now, it operates at a scale unimaginable to the early goldsmiths. And this is where the loopholes begin. As banks grew, their power grew. They became the gatekeepers of commerce, the lifeblood of economic expansion, and the architects of credit, the fuel of modern society. But with great power comes the temptation to manipulate the rules. When governments realized banks could create money through lending, they stepped in. Regulations were formed, but they weren't designed to protect citizens. They were designed to stabilize and expand the banking sector. For example, banks were allowed to hold only a small percentage of deposits as reserves. The rest could be loaned out. If you deposit $1,000, the bank doesn't keep $1,000. They might keep only $10 and lend out $990. That $990 gets deposited somewhere else. And again, only a small fraction is kept. The rest is loaned again. Money appears, debt multiplies, banks profit, and you, the depositor, see none of that return. But this was only the beginning. Fast forward to the 20th century, when governments unlocked the most powerful loophole of all, they removed money from gold. In 1933, the U.S. severed its link between currency and gold domestically. In 1971, President Nixon ended the gold standard completely. From that moment on, money was no longer backed by anything. It became pure debt, created through loans, controlled by banks and central banks, and managed by institutions that benefit every time you borrow, spend, or try to save. Without gold, banks could expand lending further. Without limits, the financial system could inflate endlessly. Without oversight, loopholes multiplied. Derivatives, securities, credit markets, shadow banking, all built on the same principle. Use other people's money to generate enormous profits while transferring the risk back to them. But every system pushed to its limits eventually breaks. In 2008, the world witnessed what happens when financial loopholes collide with greed. Banks created and sold risky loans.
Ow.
Those loans were repackaged into safe investments. Credit default swaps multiplied the risk. And when borrowers defaulted, the entire financial system fell like a row of dominoes. Trillions were wiped out. Millions lost homes, jobs, savings. But here's the twist. The banks survived. because governments stepped in and bailed them out. Your taxes, your inflation, your lost wealth, all used to rescue the same institutions that caused the collapse. It was protected. After 2008, governments promised new regulations, stricter rules, and safeguards. But instead, banks found new loopholes. 1. Low interest rates. This made borrowing cheap for them, not for you. 2. Complex financial engineering. New products replaced the old toxic ones. 3. Unlimited quantitative easing. Central banks printed money, but it mostly flowed into financial markets, not the real economy. Meanwhile, wages stagnated, cost of living surged, debt exploded, savings lost value due to inflation, and who benefited? Gangs, corporations, asset holders, the same elite who understand the system and exploit it. Today, the system is more extreme than ever. Over 90% of money in circulation is digital, created through bank lending. Most of it never existed before someone went into debt. Top banks earn billions in profit every quarter, even in recessions. Why? Because they profit whether you borrow money, pay interest, or default. And the loophole that lets them do it is still the same. Your deposits become their leverage multiplied, loaned, and monetized. You get a fraction of a percent in interest. They get enormous returns on money you provided. And if something goes wrong, history shows who pays the price. Not them. Never them. So what can we learn from all this? Takeaway number 1. The banking system is built on debt. Your savings don't sit in a vault. They fuel a complex machine designed to create more debt and more profit for banks. Takeaway number 2. Loopholes never disappear. They evolve. Every crisis exposes the system, but every fix creates new opportunities for exploitation. Takeaway number 3. Financial awareness is your first line of defense. Nobody will protect your wealth, not banks, not governments. Understanding the system is the only way to avoid becoming a casualty of it. The more you learn about how money is created, distributed, and controlled, the harder it becomes to believe the system is designed with your best interests in mind. Because it isn't, and it never was. If you want more deep dive investigations into how the financial world really works and the hidden mechanisms shaping your economic life, subscribe, turn on notifications, and join me as we continue exposing the truths most people never hear. Your financial freedom depends on it.